Hello, everybody. Welcome. Let's get started. Overall markets are flat today. Dow Jones went down a little bit and recovered. All the markets kind of went down a little bit in the morning and recovered. It's a choppy, low volume day. Probably going to be like this for the rest of the year as people take vacation days. No major news. Some repositioning going into the year end. But ultimately, I don't really expect many major moves in the next few days. Very low volume. Nasdaq is up. It's led by semiconductors. Nvidia is up 2.5%. Broadcom and AMD are up 5%. Intel up a couple percent as well. So semiconductor industry is carrying the entire market today. And this has been the case over the last couple of days. So that's really interesting. Nvidia obviously has gone up a lot in the last 2 years. And this is, I think, a bit of a dead cat bounce after going down 10% in the last month, but we'll see how that goes. Broadcom is a new darling of momentum investors, kind of taking share away from Nvidia's attention, I think. AMD is bouncing a little bit, but it's down substantially in the last 3 months or so. AMD in the last month still down 20%. Really, in the last month, in the last 3 months, it's just Broadcom and a bit of Nvidia pulling the market. Aside from that, Tesla obviously has been a huge runner in the last 3 months. In the last month, up 27% as well. In the last week, Tesla's down 7%. Today, up a couple percent. So Max 7 companies are pulling the entire market higher today, led by semiconductors. Tesla has been choppy in the last few days. Walmart is down 2.5% today, which is pretty unusual for Walmart stock. And it's been going down in the last few days, down about 5-6%. I'm not sure what that's about. There was a bit of a small news today about a lawsuit against practice against drivers or something, but I don't think that's the reason why Walmart went down substantially in recent days. Over the last 4 days or so, Walmart stock dropped almost 7%, and it's a $720 billion company. So we're looking at a really substantial drop here. We're looking at almost a $50 billion drop in Walmart's market cap. So I'm not sure what that's about. That's kind of interesting to me. It's usually a very secure stock. Let's see, Target in the last 5 days has been flat. And so you would expect, let's see Costco. In the last 5 days, down 5%. So that's also interesting too. So both Walmart and Costco are down about 5% in the last week. As you may remember, I'm very sensitive to any changes in consumer health, consumer sentiment, consumer spending, which drives about 2/3 of the economy. So something like this always kind of piques my interest. Lucia, how are you?
Hey, yeah, man, all good. How are you, mate?
I'm good. What do you think is driving Walmart Costco drops here?
I have no clue. I just landed right now.
Yeah. Cool. Looks like YouTube sound quality is great. Thank you for letting me know. For those of you, it's really good practice for listeners to please let me know at the beginning of the space, whether on X or on YouTube, how the sound quality is. It really helps me out a lot. All right. Lucia, what do you think about Tesla? Let's talk some Tesla.
Well, I think that we are finally seeing some data from the FSD tracker. The data is promising, but I don't think it's nowhere near like a breakthrough. And FSD V13 is the only thing that can justify the current valuation. I think investing in Tesla right now it's a huge bet, which could pay off, but I think the chances of it not paying off are maybe higher right now.
Yeah, interesting take on FSD, Luce. FSD tracker, I think, has now more than about 1,000 miles, right? Is that right?
Yeah, yeah, it does.
Yeah. I mean, I still think that we should wait until tens of thousands of miles before we pass judgment. But early indications um, after the initial, obviously, kind of their usual. It's always this way. I don't think it's ever missed, where they send it out to a handful of um, influencers, which the drives are always perfect, and then with the next couple of waves, that hype dies down, and then you get the FSD tracker data, which is very much in line with what we've been expecting ever since V13 has been rumored to be 10 times, 20 times, etc. better, which obviously we're not seeing that in the data. So this is very typical, and I would expect this to continue every year from now on. Luce?
The problem, Yaman, is that FSD 15 has been, let's say, widely released, has been like 3 4 days, right? And I've seen all kind of errors being made by FSD. I've seen it running red lights, going over carbs. Sorry. Um, I've seen it like making all kind of errors that V12 would, and even if less, all the problems are still there for what I can see.
Um, yeah, I think, like I said, I think with V12, we kind of passed the point of being able to gauge how each software update is different from the last one. Because once you get to hundreds of miles per critical disengagement, a lot of people are going to start reporting, um, like most people will experience drives without a critical disengagement. So this is great from a sentiment perspective, and maybe drives a bit of a hype in the stock and everything. But ultimately, this software needs to get to at least hundreds of thousands of miles nationwide, and FSD tracker is a nationwide data, so that they can focus on like restrict the operational domain to a couple of cities where you're getting 1 million+ miles per critical disengagement, so you can start your robotaxi service. And we're nowhere near that. And all of the data that's coming in, except for a handful of videos from extremely biased individuals, um, corroborate that theory. So I've kind of passed even discussing debating this topic, because it's just you're not going to change the minds of some people. Luce?
So I will tell you something crazy, Yaman. So as you say, the FSD is getting really good, and I'm seeing people like not taking action when they should. Like there are situations in which FSD is putting the driver at risk, but the driver puts so much faith in V13 that even out of curiosity of seeing what it will do, doesn't intervene. And this is extremely dangerous. I've seen like merging in intersections that are completely wrong, and and put the driver in such a danger, and they still don't intervene. And this false sense of safety, in my opinion, makes the software more dangerous. But yeah, so we will see. The data is coming in. We will see.
Yeah, I'm not really concerned about that kind of stuff, just because, like, it's the person's own judgment. It's not my place to kind of tell them intervene now, intervene then, etc. I just look at the nationwide data. I'm very data oriented, and unfortunately, FSD tracker is the only one that even comes close to showing unbiased, statistically significant data. And even if Tesla shared their data, honestly, it would be like, unless if it's like Waymo does a good job, I think, by sharing data. you know, get outside like Swiss Re, I think, corroborated their data. So it's important to kind of have that third party review of the data. But outside of that, the only thing I look at right now is Tesla FSD tracker. And I think today we're kind of getting to, like, I'm pretty confident with my call that FSD 13 is not going to get to um, unsupervised or robotaxi driving. Um, and I don't think FSD 14 is going to get there either. I think we're 5 to 10 years away. And that's exactly what FSD tracker is showing. So let's kind of take a look at this data. If you guys go to TeslaFSDtracker.com, TeslaFSDtracker.com, I'm going to pin at the top of your screens the tweet I sent out the other day about Tesla FSD Tracker. Um, Here's at the top of your screens. This is a tweet. And, tweets like this don't get spread because they're not extremely bullish. Usually, bullish sentiment tweets get spread the most, reposted the most, and that's just the nature of the game in the community. So, but I said, I recommend FSD Community Tracker, created and maintained by Elias, and also just go ahead and follow Elias. The link is at the top of your screens for tracking FSD progress. Despite what the biased Tesla influencers want you to believe, it is the most comprehensive and least biased tool. And so, like, everybody has bias. I'm not saying I don't have bias, right? I have a short position in the stock, so obviously, um, as much, I think we're all human. As much as we all try to remain less biased, it's just impossible to be like a robot. So I do what I can to minimize it for my benefit and for the benefits of Tesla Live listeners. And I think FSD Tracker is a great tool to achieve that, to at least make some progress towards that. So the screenshot is from TeslaFSDtracker.com, midway through the homepage. Elias created a really great dashboard. And when I posted it 3 days ago, there were only 763 miles from 63 entries. Okay. If I look today for V13, there are 107 entries, so nearly double the entries just in 3 days, and 1,445 miles, so double the miles. Okay. And the percentage rise with no critical disengagement is 95.3%. Miles to critical disengagement is 157 miles. City miles to critical disengagement is 96. So slight improvements from the data that you see at the top of our screens, but still in line with my 95 to 96% prediction for FSD 13. So the initial data was pretty bad. And I didn't think it was kind of, you of course need more data. You need hundreds of entries from around the country, tens of thousands of miles to get to a point where you can say, okay, I can kind of start hanging my hat on this. But the point right now is that people are entering their data at a pretty rapid pace, and I predicted by March we're going to get a good gauge of where FSD 13 is. But it may even happen before that, actually, at this pace. So let's say, for example, in 3 days doubled. People are going to go traveling during Christmas and then New Year's. So, um, so we might get a really good idea, let's say by like late February, of where the software is. Um, I mean, if the miles double if they continue to roll out, it looks like Tesla kind of slowed down the rollout a little bit. But if they continue to roll out, we might get somewhere in February the data that we need to kind of gauge where FSD 13 stands versus FSD 12. The one thing to kind of note about FSD 13, however, is that this data is coming from like they did a FSD 13 V13 Lite rollout. Um, According to release notes, some of the things that were rumored to be coming for FSD 13 is just not there yet. So it wasn't ready. And I think they just wanted to get something out. Like, for example, 3x increase in the context window, I don't think is still there. And so that's a positive to the future of FSD 13. So in the future, when they do incorporate 3x larger context window, which obviously is going to need more training time, more GPUs. So maybe that's the limiting factor here. Um, at that point, we should see the percentage drives no critical disengagement improve quite a bit. And but on the other hand, this data for V13 that's being logged on Tesla FSD tracker is coming only from hardware 4 cars, AI 4 cars. So AI 4, you know, that model, my guess is that bigger and they can't fit it into hardware 3 car just yet. So they're going to have to do some sort of a optimization to kind of like what you see in these LLMs. You know, you have ChatGPT o1, ChatGPT o1 mini, or you have Grok mini. So I think they're going to have to do some sort of optimization to bring a smaller version to hardware 3. So once you start seeing hardware 3 cards also log in their FSD 13 data to Tesla FSD tracker, that's going to be a negative. So there's a potential tailwind from the 3 times larger context window. There's also a potential headwind coming from hardware 3 cars logging in their FSD 13 data to TeslaFSDTracker.com. And we'll see how that all pans out. You know, I think it's still too early to pass judgment, but this initial data doesn't, you know, make me jump out of my seat to change my theory that percentage of drives with no critical disengagement will get to about 95 to 96% by the end of 2025 for FSD 13. Luce?
I just wanted to give credit where credit is due. If you look at the data, you can see that the majority of critical interventions were from New York, and beside New York, all the other states are doing way better. And so I think that, in fact, there is a huge improvement. But I'm just saying that the improvement that will be needed for robotaxis is so much bigger that it's actually not material, even if V13 is 6 times better right now.
Okay, great. Thank you, Luce. So if we look at state by state, so this is the lower left corner of that dashboard that Elias put for TeslaFSDTracker.com. For V13, you have Michigan showing some critical distinction, and most of the critical distinctions are coming from New York, like Luce pointed out. New York has 7 entries, and the leading state with entries is Illinois, but the leading state with miles entered is Michigan and Texas. And California has only 11 entries with 30 miles. So I actually honestly don't look at the break. I've said before in the previous spaces that there just isn't enough entries to go state by state. The only thing you can really do, um, you have to look at nationwide data, I think. So, but it is important to kind of what Lucha pointed out that a lot of the critical disengagements are coming from New York. And then the other slice that Elias does is driving conditions. So in driving conditions, you can see he has it by dark and day and clear skies and traffic and dusk and sunrise, sunset, cloudy, etc. But again, um, there's just not enough entries. You have to have hundreds of entries or thousands of entries coming from dozens of different people from each category to be able to kind of say, okay, in these conditions, FSD does better, etc. And now we all know, the general takeaways from FSD is like sometimes it struggles when there's heavy traffic because there's just many things to look at once, and maybe that overwhelms the system a little bit. Sometimes it doesn't do great with lane changes, so you can see top causations for disengagement 19 for lane issue. So this has been very consistent from um, FSD update to FSD update. Traffic control is, I guess, classified as critical one, so that's in red. And then there's some navigation maps issues, late braking, etc. Um, City miles to critical disengagement is 96 miles. Okay. This is going to change. I'm still, again, we don't have enough data to say, so these numbers are going to change pretty wildly. But my rule of thumb right now is that FSD can drive hundreds of miles without a critical disengagement. So hundreds of miles without a critical disengagement. So it's good as ADAS, to the extent that you're not worried about being on your phone and stuff. I recommend people getting FSD. I mean, I love using it. I feel less safe if I'm not using FSD when I drive a Tesla. And but one thing I learned over the years is that the average consumer doesn't necessarily do what I do. So, all right, Luce.
So call me old-fashioned, Yaman, but and I haven't tested the software, so maybe I even talk from the perspective of some customers that haven't had the first-hand experience. But I honestly don't think I will feel safer because the sense of false security that this software can give you right now, it's insane. There are some, like in these few days that the software has been out, there have been videotaped tens of situations in which FSD could have caused very serious accidents. And can you imagine relying on this software when you know that if you did everything yourself, you will be a better driver? No, I understand everything. I understand that it's supervised. I'm just saying that personally, I will not use it.
Okay. All right. Let's see what else is new. Unless if there's any questions, comments on FSD tracker, we're gonna let the data come in and speak for itself. So you posted about something about ASML, Luce?
Yeah, it's very interesting, at least for me. So, ESML, and I know it's crazy.
Actually, let's stick with Tesla for now, if that's okay. Um, so Sawyer just posted about a couple hours ago. Every Tesla referral you make now enables you to have an FSD subscription for up to 10 months. Okay. I mean, at this point, like, is anyone even paying for FSD subscription? I think that everybody's kind of using just the FSD free trial, and to the extent you can do referrals. Sounds like to me FSD is pretty much included now in almost all Teslas. You can now redeem free FSD subscription with your Tesla credits. Okay. And there's a Reuters article about Trump and Tesla will turbocharge self-driving race. So let's read this real quick. In 2025, a competition to master assisted and autonomous driving will begin in earnest. Car makers like Tesla are chasing a market that McKinsey reckons could be worth $400 billion by 2035. But the benefits may prove elusive. Cars that don't require hands on wheel are arriving. The industry grades capabilities on levels 0 to 5, ranging from no sport to vehicles handling and any scenario without a human pilot. Alphabet's Waymo, Pony AI, and Baidu already operate level 4 rentable cars, dubbed robotaxis, which can operate without drivers in test zones. Only 5.5% of cars sold in 2025 include simpler level 2 plus assistance like cruise control and automated lane changes, estimates Canellis. Incoming US President Trump may be a catalyst. He wants to shrink regulations on AI development, the Washington Post reported, and appointed Tesla CEO and Cybercab creator Elon Musk to reduce bureaucracy. Even small steps like expanding pilots would allow car makers to gather data and commercialize advances sooner. For what happens next, look at China, where at least 19 companies are trailing fully autonomous vehicles. Goldman Sachs reckons the People's Republic could see 90% of sales boast level 3 or above by 2040 versus 65% in the US. If Trump accelerates adoption, US highways will look more Chinese. Countries in Europe and elsewhere will face pressure to follow suit. Progress brings risks. Car makers use both incentives and features to lure customers. In China, autonomous technology has become a deflationary weapon in price war. A Bernstein survey showed around half of consumers there now expect self-driving gizmos at no extra cost when buying electric cars. City research suggests that in 2025, models below 200,000 yuan, about $28,000, will include those features and they will be key in purchase decisions. So, again, all of this so far is in line with, I think FSD will probably be included in all Teslas in the near future for free. That means the $400 billion prize will be hard to grasp as autonomous tech increases costs without necessarily enabling higher prices. Yet products without these features will be less competitive, forcing laggards to pay catch up. BYD, whose founder once dismissed the concept, has pledged $14 billion towards developing self driving rides. Toyota earmarked $11 billion for software and more earlier this year. Buying innovation is an option. VW invested $700 million in China's Xpeng to access the expertise. Other pioneers that could prove attractive partners include Li Auto and smartphone maker Xiaomi. In 2025, car makers will work hard to stay in the autonomous driving race. That's it. Lucia?
No, I just wanted to say that the ASML comment was about Tesla, but no problem. We can talk about it whenever you want.
Okay, well, go ahead.
Well, what I think is interesting is that in the ESML outlook for 2030, semiconductor growth is not being is not being driven by Optimus humanoid robots or smart cars. In fact, in those two categories, the growth seems very slow. And for people that don't know what ASML is, ASML basically sells the machinery needed to produce high-end chips. Those chips will be the chips that are used in AI and edge AI. Edge AI is devices that are able to run AI algorithms being offline, which is what robotaxis or humanoid robots will need. So their outlook is very important, and usually they are very good with their outlook. They don't lie. Like, in fact, they downplay if anything.
Okay, thank you. Henry Abanto on YouTube live chat asks about what we discussed at the beginning. Walmart stock dropping 5-10% in just a few days. Doesn't that drop in Walmart tell you that early recession callers are fleeing that trade, Yaman? Um, yeah, sometimes Walmart, like companies like Walmart, Target, they act like recession proof. And in a recession, people may downgrade, let's say, from Target to Walmart. Um, so Henry is asking, the stock declining, doesn't that? I mean, I'm not sure exactly if that's necessarily true, especially because the stress in the economy right now is in um, the lower income portion of the economy, portion of the consumers. Like, for example, this morning we got consumer confidence, consumer board released consumer confidence numbers. and that we are significantly below expected. So let me just read you a couple of sentences from this report. December's fall in confidence was led by consumers over 35 years old. Consumers under 35 became more confident. Among income groups, the decline was concentrated in consumers with households earnings between $25,000 and $100,000. And then another sentence from the same report. The proportion of consumers anticipating a recession over the next 12 months was stable near the series low. Meanwhile, consumers' assessment of their family's financial situation, both current and over the next 6 months, weakened. So, um, it's also interesting that consumer confidence surged the month in the December after Trump was elected in 2016, but dropped substantially in the December after he was elected this time. So that's another key takeaway here. That's important to note. And that's in line, kind of corroborates the information or the theory that I've posed, which is Trump this time around is coming into a very different economy than he did before. And the same playbook that he's pushing about tariff wars, tax cuts, may not be the best way to approach the current economy versus 2016. So that's TBD, TBD to be seen. We'll see how that plays out. But so far, the information is about coming in about as I expected. There's also like I think the consumer segment, which is 2/3 of the GDP, consumer spending, which is 2/3 of GDP, is I see many early indications that it's weakening faster than people realize, along with the employment market. So it's still too early to say we're definitely in a recession, but I see some indications that it's kind of starting to snowball. Lucia, any comments on that?
No, I think, Yaman, that what you said is spot on. And I also wanted to say that regarding the last Fed rate cut, you were spot on also on the fact that the rate cuts were gonna go slower, and it's something that the market didn't predict, and you predicted rightfully, right? So good job.
Thanks. Yeah, if you guys want any more macro insights, you can follow the co-host Macro Analyst. That's my account. That's where I do macro analysis, not to bother the people who've just fallen for Tesla and stock picks. All right. Let's see what else. So this is the last week of sales for Tesla, and I think there's never really been a better time to buy a Tesla, the vehicle, in Tesla's history. I think these are the best cars ever produced at now the lowest prices combined with the highest incentives. And after this week, the EV tax credit may go away. So to the extent that people are looking to buy a car, highly recommend getting a Tesla. Honda and Nissan are in talks to merge by 2026, they said today. Let's read that. This has been kind of in the works for a little bit. There was a short squeeze in Nissan last week. And so let's see what other details have come out from this news. There's going to be more of these, obviously. Honda and Nissan are in talks to merge by 2026, they said on Monday, a historic pivot for Japan's auto industry that underlines the threat Chinese EV makers now pose to the world's long dominant legacy car makers. The tie up would create the world's third largest auto group by vehicle sales after Toyota and VW. It would also give the two companies scale and a chance to share resources in the face of intense competition from Tesla and more nimble Chinese rivals such as BYD. The merger of Honda, Japan's second largest automaker, with Nissan, its number three, would be the biggest reshaping in the global auto industry since Fiat Chrysler and PSA merged in 2021 to create Stellantis. in a $52 billion deal. Smaller Mitsubishi, in which Nissan is a top shareholder, was also considering joining and would make a decision by the end of January, the company said. CEOs of all three held a joint press conference in Tokyo. The rise of Chinese automakers and new players has changed the car industry quite a lot, said Honda's CEO, citing technological trends of electrification and autonomous driving. We have to build up capabilities to fight with them by 2030. Otherwise, we'll be beaten. Two companies would aim to combine sales of nearly $200 billion and operating profit of more than $20 billion through the potential merger, they said. That's amazing. They aim to wrap up talks around June 2025 before setting up a holding company by August 2026. Wow. How does it take so long? That's crazy. When shares of both companies will be delisted. That is wild. I mean, these are both Japanese companies, so that's a long process for 2 years, basically. Honda, which has a market cap of more than $40 billion, roughly 4 times that of Nissan, will appoint a majority of the company's board, they said. Combining with Mitsubishi would take the Japanese group's global sales to more than 8 million cars. The current number 3 is South Korea's Hyundai and Kia. Honda and Nissan have been exploring ways to bolster their partnership, including merger, Reuters reported last week. In March, both said they were considering cooperation on electrification and software development. They widened the collaboration to Mitsubishi in August. Last month, Nissan announced a plan to cut 9,000 jobs and 20% of its global production capacity after sales plunged in key China and US markets. Honda also reported worse than expected earnings due to the China sales slump, although solid motorcycle and hybrid car businesses helped to secure a relatively stable financial base. This is not a rescue of Nissan, Honda's Miba said, adding that Nissan's business turnaround was a prerequisite for the merger. Like other foreign car makers, Honda and Nissan have lost ground in the world's biggest market, China, to BYD, and other domestic makers of electric and hybrid cars loaded with innovative software. In a separate online press conference on Monday, former Nissan chairman, now wanted in Japan as a fugitive for jumping bail and fleeing to Lebanon, said he did not believe the Honda-Nissan alliance would be successful, as the two automakers were not complementary. French automaker Renault, Nissan's largest shareholder, said it would discuss with Nissan and consider all possible options. Sources said Renault is open in principle to a Honda-Nissan tie-up. Taiwan's Foxconn, seeking to expand its nascent EV contract manufacturing business, approached Nissan about a bid, but the Japanese company rejected, sources have told Reuters. Foxconn decided to pause the approach after it sent a delegation to meet with Renault in France, Bloomberg said. Nissan CEO at press conference denied the view that Foxconn's move prompted its merger talks with Honda. Yeah, okay. All right. Luce?
And this merging really doesn't give me any sense of confidence, honestly. They are looking to die together or survive together, which is pretty funny.
Yeah, I mean,
Also,
Honda is struggling. Honda is struggling too. They're losing a lot of share to Chinese automakers in China and elsewhere, and then in US they're losing share to the Model 3 as well, both on the new car market and the used car market. So yeah, that's a and the comments from the Nissan CEO, ex-CEO, exiled ex-CEO, is apt as well. There's a lot of overlap. They're not really complementary business lines. Like Nissan and Honda mostly do sedans, so affordable sedans. And the idea that this is not a rescue of Nissan is just bullshit.
so yeah, can I speak?
Yeah,
So I remember a few months ago when Elon Musk and everybody was talking about the licensing of FSD. But so recently we saw that licensing FSD and porting FSD in other cars is something that takes quite a while. and it doesn't seem very feasible for everybody to license FSD. But it was very funny how Elon Musk said, "Yeah, we will license FSD, probably to make these automakers like not invest themselves and to stay
Yeah, that's
behind."
speculation. And I don't know if that's why he's talking about it. I don't want to speculate about people's intentions. All right. Um, let's see. I don't really see any other news here. Tesla supercharger expansion in Canada. Tesla has announced plans to significantly expand its supercharger network in Canada for 2025, with intentions to open over 50 new sites comprising more than 630 charging stalls. Okay. I wonder if Tesla's seen a bit of a sales slowdown in Canada. Maybe that's why they're kind of pushing this news. The other thing is like Canadian dollar has lost tremendous value against US dollar recently. So let's look at that real quick. I mean, to the extent that some people are considering going across the border to do their Christmas shopping. Canadian dollar in September was 1.33, and now it's come up to about 1.45. So in just 3 months, there is a 10% drop in the value of Canadian dollar versus the US dollar. So that could also be slowing down Tesla's sales. So that's an interesting kind of development here. This is true for, I mean, US dollar has been gaining value across the world against other currencies. So Tesla might be seeing similar, um, slowdown in sales growth in sales toward the end of this month. Not to mention that the recent jump in 5, 7, 10-year treasury yields is going to cause a bit of a slowdown as well. Customers are I mean, but, at the same time, Tesla offers low rate financing, so maybe not so much on that front in the near term. But that will be reflected in Tesla's margins because when the yields go up, when all the loan rates go up, and Tesla's still offering 0%, 1%, um, subvented rates, they have to cover the cost of that by paying a one-time payment to the lender. Luce?
I just wanted to say that my suggestion is that to keep cash in US dollars, whatever, like euros as well is losing a lot compared to the dollar. So
Yeah. I mean, at this point, Tesla produces most of its sales locally. So most of the sales in China are produced in China. Most of the sales in Europe are produced in Europe. Most of the sales in US are produced in US. So Tesla isn't as impacted by these currency movements um, from a sales, like a direct sales perspective, as other companies. But there's no production in Canada, so cars produced in US sold in Canada will have a bit of an impact. Tesla stock is up 3%. Nvidia stock is up 3%. Bitcoin came down quite a bit overnight, now trading at about $93,000. I think it dipped below 93,000 briefly this afternoon. In the last 5 days, Bitcoin is down 7%. Lucha, what's funny? What's so
well,
funny?
it's funny because if I own all the bitcoins, what do I own?
Okay, Luce, you're being disruptive. I'm going to move you down to listener. Bitcoin price is down about 2% today, 7% in the last 5 days. Um, that's a very rapid decline for, I mean, even for Bitcoin. It's been kind of straight down since December 17. So in the last week, the Bitcoin is down 12%, 12.4, 13%. And Bitcoin is seen a bit like a very speculative asset. So um, it's a darling of traders. There's a lot of levered ETFs that follow Bitcoin prices. Some people buy MicroStrategy or call options on MicroStrategy to lever it even more. And we've seen commentary from Interactive Brokers CEO that cryptocurrency traders are highly levered as well. And there's also things like meme coins kind of popping everywhere now. Like Fartcoin went up to about $1 billion of market cap. So I think Doge went up quite a bit as well um, since the election. It went to 50 cents again, now down to 30 cents. So they're volatile. Clearly, nothing about store of value for these things or replacing the US dollar anytime soon. But I kind of use Bitcoin and these meme coins as a gauge to keep an eye on the speculation going on in the market. Um, so I'm short MicroStrategy, down 6% today. MicroStrategy is down about, let's see, the first time I shorted it was about $500 per share. It's down about 30% from that. And I kept adding. So it's been a pretty good trade. I don't think MicroStrategy, there's any reason why MicroStrategy should be trading above $40 billion today, which is the value of its Bitcoin holdings. And if the Bitcoin price come down, then MicroStrategy's intrinsic value will also come down quite a bit. So it's a short that can potentially make about 90%, I think. But it's a very volatile company. So let's say, for example, Bitcoin prices turn up to 100,000 plus, then MicroStrategy would jump. There's a lot of short interest in MicroStrategy too. So to the extent that anybody wants to follow me into MicroStrategy, just be careful with your position sizing and the way you short, etc. Um, also, it's also interesting that Bitcoin is coming down to 93,000 now and dipping even below 93,000. In it was supposed to be, I think Tom Lee, who is being very popular on CNBC, from going from podcast to podcast on his X account. Um, Earlier this year, he recommended Russell 2000, which has continued to underperform. So he's been wrong on that, and he stopped talking about it. And then about a month or two ago, he said something like Bitcoin is going to close well above 100,000 a year. So if he's going to, I think he might be wrong on this one as well, from the looks of it at least. So I think it's important to kind of understand when people are just super popular on these channels. Not everything they say is always correct. Like nobody's perfect. So um, he's also a big bull of Bitcoin, Tesla, Nvidia, even MicroStrategy. He came out recently and he spoke favorably of Michael Saylor. And ever since that interview that he gave Tom Lee, MicroStrategy is down about 20%, 25%. So um, just a really interesting type of personality, I guess, but not really somebody I follow very closely. It's just hard to not see him in these channels every now and then. Let's see what else is new here. Broadcom jumped about 40%, 50% in the recent couple of weeks. But my understanding is that this is driven a bit more from retail traders looking for a replacement for their Nvidia hype, now shifting to Broadcom. So I don't really see Broadcom's business or Broadcom um, going up like 10 times like Nvidia did from here. So just be careful if you're kind of trading into Broadcom like everybody else right now. Let's see what else. Currently, there is a less than 10% chance of a 25 basis point cut in January and 91% probability of a no change in January. Um, that's really interesting because the Fed basically said they're not going to cut. So markets are still kind of, at least there's some people that think they might cut still. 37 days to the next meeting. And then by the end of 2025, markets expect 4% federal funds rate. So that would be just one cut. That's interesting too. Yields are up a few basis points today. Treasury yields up 5-6 basis points. The 10-year Treasury yield is at 4.58, coming up to 4.60. 30-year is at 4.77. So the longer end of the curve has moved up substantially since the Fed meeting, which means mortgage rates will stay high for a while, and other loan rates are likely moving higher as well. So this is going to put significant pressure on demand for cars and demand for houses. So consumer spending, which is two-thirds of the economy, I think is going to continue to be challenged and slow down further in the coming months. This is in line with my recession call. So consumer sentiment data that came out also in line with my recession call, and durable orders, durable goods ex transportation went down. Durable orders were down 1%. Durable goods ex transportation was also down slightly, both below expected figures and significantly below the October readings. So this is all in line with uh, substantial slowdown going on in the economy that is not yet being reflected in the macro data. The GDP data that's released is highly revised later on, even like a year after they continue to revise these things. So I would expect a revisions downward on GDP figures for Q4. The other thing to note here is the breadth in the market in this last bounce since the Fed conference is just very much focused on semiconductors. Even Tesla has been a little choppy in the last few days with its momentum. But Nvidia, after selling about 10-15% in the last month, it's bounced a little bit. And Nvidia has, a significant weighting on the market. So it's kind of pulling, like kind of keeping the markets higher. But if this markets going higher continue in 2025, it's gonna have to broaden out. Like Nvidia can't carry the entire market forever. So that's another thing I'm watching, and we'll see how that goes. Bitcoin just dropped below 93,000 again. Interesting. All right. Any other questions, comments? Otherwise, I'm going to end the space. And tonight we have the AI amateur space at 7 o'clock, where we discuss non-Tesla AI news. There's a lot going on in Gemini, on ChatGPT. I'll give you a little taste of it. I posted this question. I posted a picture to my followers, and this is at the top of our screens. Can you name this chart? So by looking at the lines and the y-axis, can you name what this is? This is an important graph for stock market. And then I also asked the same to um, LLMs, the common large language models from ChatGPT, Gemini, and Grok. ChatGPT 4.0, which is what most people use, got this one wrong. It was wrong and guessed that this was the VIX fear index graph, and that's wrong. But then I switched the model to ChatGPT o1, and o1 got it right. And I actually use o1 now for most of the things I do. So o1 knew it, and it also just looking at the value and the y-axis, it was able to identify this is the Shiller Cape cyclically adjusted price to earnings ratio for the S&P 500. Then I asked Gemini 2.0 Flash Experimental, which is a really good model that kind of came out of nowhere for most people and is now even better than ChatGPT in many respects. So Google is making a huge comeback on this front. And 2.0 Flash Experimental also nailed this cyclically adjusted price to earnings ratio. And then I asked Grok, can you name this chart? And Grok thought that I was looking for a name for this random chart. So, let alone trying to guess what the chart was about, it just completely misunderstood the question that the other two was able to handle. So, maybe Grok 3 will do a better job in, catching up with the other two. I think XAI is making significant investments into improving its capabilities, but the other two aren't standing still clearly. And I think this has implications for Tesla's Optimus project because Tesla Optimus, team has some commonalities. Obviously, with the XAI team, the methods used are going to be, have some commonalities. And Tesla Optimus will also face competition from Google as well, which recently partnered with a robotics firm. And Google is vertically integrated into designing and manufacturing its TPUs, tensor processing units, is also probably the leading team across the world when it comes to software on AI with Google DeepMind, and also does in-house research to a level that no other company does. So there's going to be significant competition for Optimus. Um, so to the extent that people are relying on Optimus selling in the millions or the billions, etc., I think that's way too early to be assuming that this is a given. And I did a write up at the top of our screens. I used a bit of AI to do this write up, talking about the competition for Optimus. So you're welcome to go ahead and read all that, and then let me know what you think tonight in AI Amateurs at 7 p.m. Eastern, 6 p.m. Central, 4 p.m. Pacific. All right, thank you very much, everybody. I'll chat with you all next time. Take care.